Hello and welcome, BitMonger family. Hope you guys are doing well this morning, wakey bakey. And in today's video, it's going to be a short one. I'm just going to give my thoughts on what I'm seeing in the market, something that has come to my attention on someone that I do listen to when it comes to macroeconomics and his background, because I find him to be very insightful, Arthur Hayes. And if you're not familiar with who he is a big player in crypto, Wharton College graduate, worked for Citibank and different trading desks over in Asia, and is generally a really smart cookie. And while I don't necessarily agree with him on his altcoin picks, I do think he is someone that you should weigh his opinion when it comes to macroeconomics and how government banking, liquidity and these matters work. He is really on top of his game. If you don't know who he is, look him up. His name is Arthur Hayes. He also writes some really insightful essays, are really good reads. Sometimes they can be quite difficult. Sometimes they're over my head. I didn't study finance. I'm self-taught. But he's someone that you ought to listen to. And he brought something up, and I looked at a news article as well. I looked into it some more, and there's some weight to it, and I don't think a lot of people are looking at this fact. So, first of all, let's go and take a look at the market. Look at Bitcoin, and we can see Bitcoin's currently trading just under 88K. It did have another bounce back up, slight bounce back up. And if we get any sort of downward push, guys, if Bitcoin starts to go back down, I intend to sell my short and go long. If we see it get back down to like 86 or 85, low 85Ks, I will be cutting my short, taking profits, and moving to a long position, because I do think we will get a Santa rally going in towards the end of the year and the first couple trading days of January. So that's my plan. Let's take a look also at what's happening here. So we can see, Bitcoin's up almost 3% on the 24-hour. Ethereum's up 5.1%. BNB's up 2.8%. XRP's up 6.4%. Solana's up 6.3%. And so we had a nice little bounce, guys. And if you bought Ondo yesterday after my video, because it was in that value zone, that blue box that I'm looking at here on Ondo, guys. We can see Ondo had a nice little pump. It's up like 8%. And if you pull this out, you can see this is this is on the weekly chart, and this is a really good value zone. I consider the value zone. Anything in this range, I think, is good for a long-term buy. And if you bought it yesterday, you've had a nice little pump, and so that's looking good. So the thing that I wanted to talk about that people are overlooking, and this is in the Business Insider. I will put the link to this article in the description. And this is talking about how the Fed made an overlooked decision that's even more important than its last rate cut. And this is something that's kind of big, guys. So here's the nuggets right here. Investors got their desired rate cut last week, but another Fed move might be more important. The Fed has begun reserve management purchases, RMP, buying $40 billion a month in short-term treasuries. Here's why that's a big deal for markets. The most important part of the Fed's last policy meeting is something that may have been overshadowed by the eagerly awaited rate cut. The central bank's decision to start reserve management purchases, a mouthful that essentially boils down to Fed expanding its balance sheet by purchasing short-term U.S. Treasuries. It's a big deal for markets. Changes to the Fed's balance sheet often fly under the radar for many investors. So, guys, just so you know, they're not going to use QE. They will not use that term because now everybody associates that with inflation. So they're going to use some other type of, stealth QE to juice markets, and this is what's happening, guys. So it goes under the radar, like as it mentions, who primarily trade based on rate cuts and expectations for path of monetary policy. Yet the central bank's bond purchase programs have historically been an important tool for both influencing interest rates as well as providing liquidity to markets. So guys, this is a big deal. I'll put the link in the article so you guys can check it out. Give it a read. AI says that it's not necessarily QE, but Arthur Hayes seems to think differently, and I do believe we will get rate cuts more going into 2026. They'll juice the markets to get the votes. That's their playbook. It always has been. And as we could see from yesterday, also the CPI numbers came out at 2.7%. Seems to really like that number, 2.7, and so it's gone down some. So that's looking good. We have CPI staying lower, and I don't think they'll ever get it down to 2%, but it's at a fair rate. And then we have jobless numbers going up. That is in line for a future rate cut. This new stimulus, them buying U.S. short-term U.S. Treasuries, $40 billion a month, and then we have potential further rate cuts coming. I think that juices the markets. Oh, one other thing that Arthur Hayes says that is a little slightly different from what I was thinking is he thinks January will be bullish, and he expects that correction to come probably in March rather than February, where I've been thinking it's most likely going to come in February. Either way, I think it's very important that we look at what's going on in Q1 and, be liquid, be ready to move based on what you see. And look for value, guys. I do think we will see some very good values. I already think we are starting to see very good value opportunities for long-term holds in certain altcoins. If you believe that we'll get a resurgence, then that's probably worth looking into deploying capital into those good projects that you like. On the flip side of that, if the market further tanks a lot in Q1, we might be getting much deeper value. So I wouldn't be going whole hog into it. I would just be nibbling on projects, keeping a nice stack of dry powder in the event we do get a nice big crash, so you can step in and buy that. That's how winnings usually done, is buying the extreme fear when everybody else is freaking out. All right, there you have it, guys. Hope you enjoyed today's video, and monger on.